This is Dan Max, the trading agent. This is a stock trading and recap channel that I wanted to share to the masses. In a probability game, there's no certainty. Here are my insights and predictions.
Hey fam, it's Dan Max, the trading agent. I'm going to start a series called Back to Basics. My goal here is just to get everyone introduced to some of the fundamentals and setups and kind of bring an element of understanding to people who are going to be newer to trading. I've gotten a lot of feedback from people, and one of the things I keep hearing is, hey, this is very obvious to you, the trading agent, how to do this stuff, but as someone newer, what do I need to know and understand to even be able to really just understand completely what you're talking about? The information that I might be providing is going over people's heads, and that's on me to clarify, and I'm going to do that for you starting today. And hopefully every day I will be adding more and more back to the basics videos, just so that the basic understanding, simple fundamentals. Like in any sports, they say, fundamentals kill. Well, that's really my strong points. I don't have a lot of super fancy it's not even understanding, super fancy technicals or not moving averages, indicators. I don't need any of that stuff. I like to keep it very simple. And, the KISS method, keep it simple, stupid. That's how I read charts. When I add tons of indicators and technical analysis, it gets very confusing because our brains are wired so that we react to the minimum amount of stuff. You throw in too many variables, it's really hard to predict and keep your brain together to go after what you really need to know. It gets very convoluted in our heads, and it can be very difficult to make very cut and dry decisions. Less variables, it's easier to know what to do versus more variables. Robots can respond to many if-then situations. Our brains, the more simple the better. I've told that for people for years because someone will show me a million different indicators and they either just follow the price, or when it's time to make a decision, it's too much. There's too many things in their brain that won't allow them to act decisively because they're looking for yes and no's in everything. And the market is again, it's a probability game. So this first video, I'm just going to do the time frames that I watch. Here's my single screen computer. Most of you who know me, I have 8 screens. It's a big deal, but these are the same time frames I'm watching. The only difference is on these time frames are blown up to full screen, and my ticker list is hundreds of names long. And on that ticker list, as you will see here, let me expand it for you. I typically keep notes. Keep a lot of notes. I don't need to keep a lot of other things other than that. But for this single screen recording, I keep it pretty simple. So the time frame that's the most important to me, well, again, what time period are you trading off of? If you're trading off of the weekly chart, it takes weeks. Trading off the daily chart, it takes days. You're trading off the intraday chart, moves happen at that periodic time frame. So let's start with, say, the 10-minute. Oh, it didn't open up all the way. I apologize. The 10-minute time frame. If you're trading off the 10-minute, an hour should happen. The movement should happen within an hour. It makes pretty simple, makes it very obvious. When I'm day trading or looking for entries, I use the rule for the 10 minutes that, first of all, it smooths out the volatility of the intraday, meaning one trade can affect the whole chart. 1 minute is not a trend. I need to see conviction. I need to see blast offs, whatever you want to call it. But when I look at just the tick or a 1 minute chart, it's just not enough information. So I like to use the 10-minute for confirmation. One 10-minute candle doesn't also make a trend change. But say, for example, here, you have this little congestion pattern. And if you wanted to say, hey, when it's ready to break out, it should get over this little area here at the top to play with it. I apologize. Let's get a little cleaner looking. Boom. That confirms it. Notice then how on the next backup candle, if it held, you're good. So day trading, 10 minutes. people have their specialties. I like longer time frames because my trades are not, I'm not trying to make 5 cents in a minute. I'm trying to make dollars. Dollars take time to coalesce. Like, they don't happen overnight or over one candle on a 1 minute chart or a 30-second chart. Those candles are very noisy. They're very hard to see. While 10 minutes at minimum shows there's somewhat of conviction. For something to hold for 10 minutes, it means something. So when you see one candle break over it, if it holds the next 10 minutes, then it wasn't just a news event. Because there are times during the day the news gets released and boom, comes back, goes up, comes right back. You have to play the probabilities. I like 10 minutes to start. You can see here at the bottom I have 60-minute chart. That's another intraday. The 120, that, you know, which is 2 hours. 60-minute 1 hour, 2 hours, daily, weekly, monthly. I keep it that simple. I don't need to always change my time frames because I understand that each time frame has a different reaction time. The monthly chart, that might take a year for it to line up. It might take the move year to play out, monthly chart. And then you can go in and look at the individual time frames to really decide what's going on and what are the next moves. Why I like to stick to the daily chart for my bigger moves is I want to see what the day says. You know, for someone to hold something overnight, it's more powerful than holding for 10 minutes. You know, the close is important. The opens are very important. The intraday action can be very clear for reversal points, say for like this doji. Where here, daily, it's just telling you chop. Well, look at that, nice gap up, retest, then go. You see these movements all the time, and if you can kind of learn to understand that all the formations are the same, it's just different time frames. Once you get that through your head, that there's nothing new. Formations, patterns, all repeat. It's just a matter of what time frame it are and what you should expect and how to handle it. So here's my introduction on time frames that I follow. Keeping it real simple. If you have comments and you want other specific parts of trading basics explained, please add a comment. This series is probably going to be in hundreds of videos potentially. This is the first one. I love everybody. I appreciate all the support I've had to kind of grow this. And as you'll see, I'll get more into it. And I hope this becomes knowledge that really is tradable. It's not just like this emotional game of gambling where you feel like you're compelled to act and then you don't realize why you did. And maybe you made money, maybe you didn't. All right. Check out the Discord room if you have time for the trading agent. There's a lot of information there. And there's also rooms subdivided into some of the learning sections and what we're doing, what we're up to. Signing off, the trading agent. Appreciate everyone. Thank you.
Thanks for watching. Please subscribe if you like the content. Also smash the like button, share with your friends, and add a comment. If there's a topic or stock you'd like me to give you insight about, let me know in the comment section. I'll do my best to answer your question. Thanks.